From KUNC and the NPR network, this is In The NoCo. I'm Erin O'Toole. Homeowners in Colorado have been watching their insurance costs increase at rates faster than the national average. And on average, they pay more to insure their homes than homeowners in other states, about $1,700 more, according to recent figures. Now, you might hear that and assume it's because wildfires and hailstorms cause more destruction in Colorado, and climate change seems to be making it worse. But that's only part of the story. The Denver Post reported recently that insurance companies are changing the way they decide how risky it is to insure a home and to determine what its owners should pay for insurance. We wanted to understand how this is affecting homeowners, so we talked to Amy Bach. She's the executive director of United Policyholders, a consumer advocacy group. Amy has been critical of how insurance companies use this new information. She says that traditionally, insurers might look at some straightforward details to decide whether to insure your home.
In the past, insurers were using historical data on what kind of claims they had received and what they paid out on their claims, construction costs, the condition of your roof, and the surroundings around your home, the age of your plumbing, the age of your electrical systems.
But now, Amy says the companies are using technology to look at other factors like slope and vegetation data that they collect from aerial images.
They are now more relying on what are called manned drones, flying over people's houses, recording footage, and then reporting that back to the insurers.
And those reams of data often lead to higher rates for homeowners and to more homes being deemed uninsurable.
They have gone from insuring properties as is to becoming extremely selective and picky and wanting properties to be virtually perfect in order for them to insure them.
Amy says this is something that's affecting homeowners everywhere.
Erin, we kind of have a perfect storm here. We know climate change is a factor. We have had inflation driving up the costs of labor materials, right? That affects insurers in terms of their payouts. Reinsurance, which is the insurance that insurance companies buy, the prices have been at an all-time high now for the last 3 years. That's also a driver. But then the tech factor seems to be accelerating the impact of all these other things. So now that insurers can get such a granular look and so much data on the properties that they had been insuring blindly, they are less and less interested in insuring those properties that have vulnerabilities.
Coming back to the models, it seems like there are some things on the local level that these models don't take into account. For example, in Boulder County, rules require that new homes need to be built from less flammable materials than in previous years. The models don't necessarily factor that in. Why is that a problem?
It's a problem because property owners are not getting credit for the risk reductions that have been made, which means insurers are charging excessive rates.
What kinds of other local rules get ignored by these models?
Well, we know that a lot of the mitigations that are taking place in public spaces, so for example, the sort of widespread brush clearing that local fire departments are doing, all the ways in which we are taking the lessons we've learned and applying them to weed abatement and limbing trees, all those things are happening, but insurers are still not taking them into account adequately. And similarly, their modelers are not taking them into account. Once you stop relying only on historical data and you start projecting, you're guessing. And if you guess high, that translates into higher prices for the consumer. And that's where we are.
Amy, United Policyholders has done a lot of homeowner surveys recently. I wonder if you have a story you could share from someone you've talked to who was trying to do their due diligence, mitigate their property, but saw no reduction in their costs.
I'm sorry to say that we are getting that type of complaint every day from all over the place. I changed out my roof. I still got dropped. I did what the insurance company asked me to do. I took many branches out of my favorite tree, and still I got non-renewed, or they offered me a renewal policy at 4 times what I had been paying. So I think people are feeling very frustrated, angry, desperate, and scared.
What was the explanation they got from their insurer as to why there was no reduction or no renewal?
People are not really getting clear answers a lot of the time. So there's a whole movement now to require more transparency on the part of insurance companies to say, well, what exactly is the problem here that caused you to drop this person or not be willing to offer them a policy? Could you be specific? And because there haven't been rules in place to require them to do that, they choose not to. And they will often say, it's a trade secret. This is our competitive secret sauce. We're not going to tell you. So my organization is pushing for some new legislation so that the property owner has a fighting chance to address the conditions that seem to be the problem for their insurance company and be rewarded when they address those conditions.
I wonder about the perspective of insurance companies here, though, because if more homes are being destroyed by floods and wildfires, or even just more roofs are being damaged by hail, isn't it reasonable to expect insurance rates to go up?
Absolutely, if in fact they were maintaining the same level of coverage that they've always had. The problem is that they have shrunk the coverage and raised deductibles. So people are paying more and getting less coverage. Part of this comes back to, again, we don't treat insurance companies like utilities, right? They are free marketeers, except that what they're selling is a lot more important to us than a set of headphones or a coffee maker, right? Insurance is really critical for people's financial health and their peace of mind. Public officials know it's time to go back to the drawing board and set some new rules. We do need some new rules.
A representative of the Rocky Mountain Insurance Association told the Denver Post that these computer models don't cause rates to go up. What do you make of that?
That is not what we have seen. In general, what we see is when insurers transition from traditional rate making to using catastrophe models, overall, it does result in rate increases. And that's just logic. When you have a vendor, a modeler, whose client is an insurance company, and they are projecting into the future, they are not going to guess low. Why would they? Then have the insurance company come back to them and say, hey, you guessed low, we didn't charge enough.
Amy Bach is the executive director of United Policyholders. We'll include links to the Denver Post article as well as a Boulder Reporting Lab story about homeowners facing huge insurance increases or coverage losses. Find those in our show notes or at kunc.org. That's it for us today on In The NoCo. I'm Erin O'Toole. Thanks so much for listening. We'll see you tomorrow.